hoards chips because they're the only game in town. To get the most out of them, companies need to buy tens of thousands of chips. Long live the king. This week, however, we learned that maybe, just maybe, we don't need to buy as many of those chips as we thought. A Chinese outfit called DeepSeek has purportedly figured out a way to get much more out of Nvidia's cheaper, lower-end chips, which makes you wonder, why should anybody buy the most expensive ones?
Jim Cramer discusses how DeepSeek, a Chinese company, claims to boost the efficiency of Nvidia's lower-end chips, potentially reducing the need for its premium GPUs. This raised concerns about Nvidia's pricing power and led to a drop in its stock. However, Cramer questions DeepSeek's claims, noting that major tech companies like Meta and Tesla still pay full price for Nvidia chips, suggesting the threat might be overstated. He also highlights reports indicating DeepSeek's costs may be far higher than stated, casting doubt on their revolutionary claims. The speculation and resulting volatility underscore the risks of over-reliance on single tech stock. Cramer advises diversification to navigate market uncertainty, as AI continues to influence the economy and drive shifts in the tech sector. Despite the noise, Nvidia remains strong, but investors should remain cautious.
Instead of spending hundreds of millions of dollars on hardware to build and train an AI model, DeepSeek claims it only spent $6 million and got something almost as good, if not better. AI for the masses. Now, if you're like me, you found all this DeepSeek chatter unsettling. So let's analogize. Let's say we were talking about oranges and orange juice. That's a simple concept. Suppose you want to make orange juice with the most expensive juicer on the market, the OpenAI juicer. It can make one glass of OJ from one orange, with an Nvidia GPU being the orange in this analogy. But DeepSeek, well, that's like a brand new juicer that can get 10 glasses of OJ out of the same one Nvidia orange. Now, if that's the case, then you obviously don't need to buy as many oranges. You can cut your order by 9/10 and still get all the OJ you need. Yeah, instead of buying 10 Nvidia chips, you can buy one and use DeepSeek, allegedly, to get the same amount of compute and intelligence. Yeah, I snuck in a critical adverb there, didn't I? Allegedly. So this declaration by DeepSeek rocked our world this week. We took it as gospel that DeepSeek, spawned by a Chinese hedge fund, has ended Nvidia's ability to charge high prices. And if that's the case, you have to expect that the company will cut prices, because its customers won't need as many chips as they did before, when demand was the same. If prices are indeed coming down, then so are the earnings estimates, which means Nvidia stock is too high and therefore must be sold. All right, all very logical. So naturally, the stock got pulverized. Made much worse, by the way, that most stocks, because there's so many one-day gamblers who like to play Nvidia like it's a roulette wheel. I mean, it's incredible how much this stock is what we used to call footballed. But not everything that's logical is true. What if the Chinese hedge fund isn't giving us the full story? What if the reality is totally different? What if DeepSeek spent a lot more on its hardware than the $6 billion that they're reporting? What if they didn't get 10 glasses of OJ out of one orange, but actually just bought 10 oranges? And that's what an article in a known authority called Semi-Analysis said today. This publication, which has covered DeepSeek for longer than most people knew it existed, speculates that the $6 billion cost is highly misleading. They say DeepSeek's real hardware spending, all in, could be more than $1.6 billion. I wonder if the PRC is subsidizing them. So if you sold Nvidia on the DeepSeek revelations, and now you're finding out that it might not be the real story, perhaps it was a huge mistake. Makes sense to me. If there were really a way for businesses to save a fortune on GPUs for AI, then you'd have to believe virtually everyone in tech is a complete moron, and that seems unlikely. Well, consider this. We learned in the last few weeks that Mark Zuckerberg, CEO of Meta, Elon Musk, CEO of Tesla, and Larry Ellison, chairman and CTO of Oracle, are all paying full price for the chips from Nvidia. Now, maybe all three are knuckleheads, or maybe there's so much demand that they simply don't have a choice. You have to believe that before they laid out the billions, they did their due diligence, which has to include the DeepSeek software story that supposedly lets you do more with less. It's not like DeepSeek was a secret. It just got a lot more attention this week. I am sure they knew everything that was in that semi-analysis piece and still went forward and paid full price. So is DeepSeek in an alternate universe that bodes terribly for Nvidia's pricing down the road? Hey, anything's possible. But if you had to design the most punitive way to bring down the price of this great stock, you'd invent something like DeepSeek. I think the semi-analysis piece is spot on. It may just be one more long knife aimed at Nvidia and nothing more. Maybe it's not so great to be the king after all.
For being with us. Wow. I mean, good timing on your part, because what a week we're having thus far. Can you give us a glimpse at yesterday's market reaction and what you thought about it?
Yeah, it was certainly a news reaction. As in, we got the news out of DeepSeek that they're able to generate these the same ChatGPT for lower costs, and I think it was a wake-up call, as President Trump says. I think it was a good point about this price competition here that we didn't really price into these mega cap stocks, specifically Nvidia, and then obviously as that Nvidia gets a correction, which is as sharp as it was in the March of 2020, when we had a similar sort of drop of 18%.
Yeah. This
time around, obviously, Nvidia with its weight in the index has a far more substantial effect on the stock market than it had at that time. So I think if I step back from it and I say look at a more macro point of view, then we're going to get more price competition in the chip space. It's going to change the outlook for profits for these companies. Interim, it does mean that there's going to be pressure at times on the index itself, given the weight of these companies in the index. And I think this is the macro factor to the economy. Is AI now becoming such an influence on the economy that because of the swings in the stocks, outlooks change for inflation and the Fed, and also for, I don't think the Fed will react to this event per se, but they're having their eyes on it, because if it does go on, then financial conditions could tighten. That could impact on economic activity. So it is actually a bigger picture too, as just a microcosm of DeepSeek versus ChatGPT and all that discussion.
What do you advise to folks and clients? I mean, when you think about this, could be a volatile time. We're going to wait to hear from the Fed. Look, there's like a 99% likelihood the Fed's not doing anything, but the language will be important. You have a slew of tech names coming out. I mean, huge earnings this week and next. What are you telling folks?
Well, this event showed that you really have to start thinking about diversification this year. That sounds simple, but it really is now of the essence, because if you have such a move coming from a few stocks, and it's been warned for over and over that this could potentially become a problem, I do think that folks need to think about other sectors to try to diversify around this particular technical effect of these Nvidia and other type of stocks. As to the Fed, it's more about, they're going to talk about the economy is strong and all that, but they know that there's vulnerabilities here, not just this event in terms of the tech sector, but also what's going to happen with trade policy and the uncertainty thereof. So we're entering, I think, into a somewhat more uncertain period, and that just emphasizes a more defensive, diversified portfolio.
So at this point, I mean, a name like Nvidia, does it still belong? Was that a big opportunity yesterday? I know you said be more diversified, but a name like Nvidia, for example, yesterday was at $117. Was that a big buying opportunity?
So if I listen to Dan Ives, and I think he has great calls, he says it's a golden buy opportunity. I think he probably is right for those who have been not as much invested in Nvidia, and this is an opportunity. But if you are, you may just want to not necessarily add more to this risk than it already is. I think you need to be careful at least. I mean, the company itself is doing exceptionally well. I don't think this is the nifty 50 idea of at the 70s where macro factors change and suddenly high quality companies really start to climb. I don't think we're in that stage here yet, but it just shows that it can cause significant volatility. There was a statistic out yesterday that the last 10 sort of market cap adjustments were all caused by Nvidia. So it just underscores the concentration risk of the market.
Right. Tell me a little bit about the market overall. I mean, there were plenty of people who were calling for a pullback regardless. I mean, they felt like, look, last week we were hitting new highs on the S&P 500. The Nasdaq's still not far off from its all-time highs, right? So you are still after 20% years on the S&P 500. I mean, there were people who were still predicting more growth this year. Do you feel like, look, at one point we were oversold, but maybe not so much, and especially if you look at something S&P 500, for example, tell me a little bit about where you think markets are and what they may do.
I do think that there's still a good case for more upside. I do think that the plans of this Stargate investment that they are doing, which is, I think, a really serious project, that in itself could have meaningful impact on the economy and therefore drive earnings and growth for the index overall. So I do think on that basis, seeing an S&P at 7,000 at some point is very likely. And I think that's and maybe also because we're getting more and more rotation within the index, which has been happening. If you think of staples or materials or financials, even energy, there have been more in a rotation trade compared to tech. And I also think that the sectors, by the way, that are driven by this AI investment, like utilities, electricity, and heavy equipment, those will continue to be in demand. I think those companies will very benefit from this change of cycle to an investment cycle. But when it comes to volatility, this is a year, I think, of more volatility than last year. It's also different than the first year of Trump in 2017. We had a very low volatility environment. And that's really because we got everything here up front, right, in terms of the tariffs, in terms of this news. I think that people are uncertain, so the volatility level will stay higher, I think.
This week, Nvidia faced challenges after Chinese firm DeepSeek claimed it could achieve high-end AI results using cheaper Nvidia chips, raising doubts about Nvidia's pricing power and causing a sharp drop in its stock. However, skepticism around DeepSeek's claims persists, with major tech companies like Meta and Tesla continuing to pay full price for Nvidia hardware, signaling confidence in its products. These developments underline the volatility of tech stocks and the importance of diversification for investors. As AI reshapes industries, balancing portfolios and focusing on broader economic trends will be crucial to managing risks in an uncertain market. Can Nvidia maintain its market dominance despite emerging competitors like DeepSeek? How should investors adapt their strategies in the face of increasing market volatility?